Service cluster, power cluster, relational cluster, and user and the lab cluster. So I took the example of myself. I said, what I like about this cluster is that you're able to see to which cluster you and your family are strong in and where you are in your practice.
Hey, you're all very most welcome to today's YouTube webinar. Today we are focusing on trading strategies. I hope you're all having a great evening today. And it's going to be quite a bit of a session. We have quite a bit to go through. Today you're here with me. My name is Nobert Kiza, and I'm the education partner here in Kampala. I welcome you all to today's session, and I'm sure it's going to be amazing. We have quite a bit to go through. And of course, as you know, momentum price action strategies are very, very crucial in trading. This is because momentum works really well with price action. And most of what we see with the movements in the market, most of it is premised on price action. And it's going to be amazing what we are going to look through. So to kick this off, we are just going to go through a few key terms just to try to understand exactly what price action is about and see how we can utilize it in our trading. There are quite a number of different price action strategies which are utilized in trading, and you'll be able to see some of them today. So to start it off, we're just going to go through what momentum price action is about. So price action is essentially just a movement of price. We're talking about the printing of the candlesticks we see, if it is a line chart that we are trading with, if it is maybe the Renko chart, all the different charts that we utilize, what we see with price evolving, what we see with the market or the prices moving upwards or downwards is essentially what price action is all about. So when I'm talking about momentum price action strategies, they are used by traders to take advantage of strong price trends and to capitalize on continuation of existing price movements. So that's essentially what momentum price action strategies are premised on. These strategies involve identifying assets that are exhibiting strong momentum, often driven by many factors. So for those of you that have traded key economic data releases, you will understand quite well that some of the movements we see with these particular data releases is actually driven by momentum. So we have news releases, we have economic data releases, we have earnings reports, and of course, as you know, we also have market events. So earlier in the week, we saw that there was a lot of momentum on so many different assets like gold, like the US indices, like the Euro indices, as well as also some G10 currency pairs like the Euro USD, like the pound dollar, like the USD JPY. This was essentially because of momentum and also because of key events, news events or market events. So what are the different forms of momentum price action? We have very many types of price action. One of the most important ones, and the one that most traders are actually aware of, is the breakout strategy. Breakout strategy focuses on identifying key break of structure or break of key support and resistance levels. We also have trend following strategy. Trend following strategy essentially focuses on chasing the trend. Now, I know there's been a term which has been coined by traders where you'll hear traders talking about something like follow the trend or the trend is your friend, you know? And of course, the major reason for that strategy is that whenever we find price action or price moving in the previous trend, then that's essentially a very good way for us to actually utilize that movement and look for a potential trade. The other, of course, is moving average crossovers. So essentially, moving average crossovers, we are focusing on utilizing a crossover of a longer period moving average and a shorter period moving average. So for instance, when we find price action at the point where two moving averages are crossing, then we know that we can essentially take a trade. However, for more context, we're talking about a longer period moving average and a shorter period moving average. So here it says when a shorter term moving average crosses above a longer term moving average, it can be seen as a potential bullish signal. So for those of you that have gone over the charts that we usually present during market snapshots, you have seen that we usually have moving averages. And whenever we have, for instance, a 6-day moving average, above a 14-period day moving average, it's always an indication that price is going to essentially move higher. However, if we have a longer period moving average above a shorter period moving average, it's always an indication that we can look for a sell. Now, the other one, which is very, very crucial, is the candlestick patterns. Candlestick patterns, for many traders, we understand them as price action strategy. This is because the way candlesticks print will always give you an indication of where price is potentially going to next. So if we have pin bars, if we have engulfing candlesticks, if we have 3 white soldiers, as most of you know about these candlesticks, if we have an inside bar or an outside bar, if we have candlesticks like the haramis, the shooting star, the hanging man, all these different candlesticks usually will indicate to us either a shift in price or a continuation in price, as you will see when we go over to the charts. Now, the other ones that we have, which are really crucial, are the news-based momentum. So news-based momentum, we are saying traders using this strategy focus on assets that have experienced significant news events or announcements that can drive substantial price movements. They react to news by entering positions in the direction of the price movement with the expectation that the momentum will continue as other market participants react to the news. So for instance, like tomorrow, we have the United States Consumer Price Index that's going to be released. So that, of course, is a key economic event, and the way price is going to evolve with that particular event is going to provide several opportunities for us to be able to utilize and trade. So news-based momentum is essentially looking at how price breaks through key structures or how price breaks through key support or resistance levels for us to essentially look for trades. Now, I know not very many people trade stocks. However, using earnings is a really, really crucial way in which you can actually utilize momentum. This is because when a company releases its earnings, it's a good indication that you can potentially look for a trade either in favor of an earnings release that is good or in favor of an earnings release that is bad. So traders may look for stocks that have exceeded earnings expectations and then enter positions based on a momentum generated by the positive surprise. Yeah, so with that, I think we can cross over to the charts and look at some examples of these different momentums that we're talking about. So recently we had Apple earnings. as well as you know that Apple essentially is just a tech stock, and Apple is one of the biggest companies we have in the world. Currently, it's a little below $3 trillion market cap. And of course, the market cap for Apple has been driven by very, very, very strong earnings, as well as also being a market leader in some of the different products that it puts out. Most especially music. In the music, it's a leadership in music because it provides one of the biggest stores for provision of music services, which you know as iTunes, but also it's very good product, which you know as the iPhone. So recently we had Apple releasing earnings, and the earnings were released around this time here. And as you can see here, the Apple earnings actually caused a gap. Okay, this gap that you see here was caused by the Apple earnings. Okay, right here. Now, the reason for this gap was because Apple actually delivered disappointing earnings. We had a drop in the iPhone sales over the last quarter, and it was the biggest drop since 2016. So when US market opened on Friday, this was I think a Friday, we had a decline of Apple, and this decline was largely because of dismal earnings. So what a trader would have done is, because sentiment essentially was not allowing for a buy in Apple, that was because it had very low earnings, and of course that was on its iPhone sales. The iPhone sales had actually dropped, and it was the biggest drop since 2016. Now, the other thing that's also crucial to know is when we look at the price action here, we are seeing that there's a rejection candle right here. So we are seeing two types of momentum forming here. First thing is we're focusing on the earnings momentum. Okay. Okay, so we are focusing on Apple here, and we are saying that we have earnings momentum here, and then we also have the candlesticks. So Apple had dismal earnings, and the purpose for this gap that we had here was caused by a drop in the Apple earnings. So when the market opened on this particular trading day here, we had a slump. Okay, and of course, what a trader would have done would have been to get into a trade right here. Okay, right at this point here, that would now have enabled us to catch this move that we had down here. So we're having the earnings momentum, which of course were dismal earnings, and then we have of course a pullback, seeing of course with the candlesticks. Now again, when you look at these candlesticks, you can see that we had a really good a block right here. Okay, and this block here was essentially indicating to us that there was a lot of selling pressure, and all this was within just one trading day. So one would have been able to capitalize on this trade just focusing on just the earnings. You'd have gotten into a sell point here, and this would have taken you all the way to the close of this particular trading day. So here we are essentially focusing on the earnings, but also we are looking at how the candlesticks are printing. Now, the other example that we have here that we can utilize is the moving average crossovers. Still, even with this particular example here, we have two moving averages that are on this chart. Okay, and of course, in this case, the moving averages were providing us forward guidance. They were showing us how we would essentially have gotten into a trade simply because we had the longer period moving average above the shorter period moving average. In this case, where we have a crossover of the longer period moving average higher than the longer period moving average, you would have essentially gotten for a sell trade right at this point. Now here we are looking at it in the form of it being a forward tool for momentum, because in this case we had a moving average crossover as a price action momentum tool right before even the Apple earnings. So one would have gotten into a trade here, and you'd have maybe even set your loss mitigation level somewhere above here, okay, right above Apple's all-time high, which was slightly below $200, okay, as you can see here with this level. So these are really good techniques that you would have actually used to profit, okay. Yeah, Lioness, you're saying no, but begin what you tell us. Some of us were at novice stage. In the morning, you said gold is expected to be bullish. Same to FX Pesa, Signal Center. Yeah. So again, as you will see in the bio, in the description for every signal, all the guidance that we give you is not guidance to enter trades. All of it is essentially to be able to take it as a guidance so that you can now make a decision to trade. Now, regarding the signal center, just to guide you, Lioness, the signal center provides confidence levels. So every signal that you're taking has a confidence level. So when you're using signals, focus on the confidence level of every signal. And then again, every signal has analysis which has been done for it. Look at the analysis and see whether it fits with your analysis. Every signal that is provided in a signal center is essentially to guide you, but you need to make what they call confirmatory analysis. So you do your own analysis, you combine it with what is in the signal center, then you see how you can take a trade. However, also, you also need to see how momentum, of course, affects some of those different assets. If, for instance, we do analysis for one asset in the morning, a lot of things will have affected how the asset will perform later in the day. So it's up to you to actually be quite keen. If you take a signal closing your eyes out from, or your ears out from what's actually happening on the market radar, you might find yourself in actually a kind of a tricky situation. So it's upon you to actually be quite keen. But I would say most of the signals that have been provided are essentially based purely on technical analysis. So that's how I can guide you to essentially see how you can benefit. All right, so let's switch now to something else. Here we had the Apple. We can also look at oil. So for oil, we are going to use the Keltner channel, and the Keltner channel is essentially going to focus on what we call the breakout strategy. So the breakout strategy is essentially guiding us on how we can look for trades that are indications of breakouts. So breakouts in line, of course, here we have two types of price action strategies we are focusing on. The first one is on the candlestick build-up or price action build-up, and the second one is on the breakouts of key areas. So when you have this indicator, this is a Keltner indicator, and it's showing you how you could potentially enter a trade when you have a breakout above the upper channel. So here we have two channels. We have the upper channel and the lower channel, and this is oil on the M30 time frame, and you can see that there was a really nice break above this upper channel. And of course, the candlesticks, we had quite a number of bars, and these bars represent bullish momentum. Now, if you're also keen to zoom in a bit and view these candlesticks quite well, you can see that the candlesticks are actually, there are quite a number of candlesticks you can pinpoint, one of them being a pin bar, the other one, of course, even being an inverse inside bearish candle, which of course showed us that the bears were getting engulfed and we had a good upside momentum. Same thing also here, we also had a breakout. So when you look for breakouts of these different candlesticks, you'll be able to actually get really good trades to take. So this would have been a very good entry. Same thing also applies for this entry right here. So it's upon you to look for these different levels at which you can actually get in and make money. Now, when we cross over to D40, same thing also, we had a really good breakout at this point. But again, as you can see, the breakout was not sustained. And of course, when you compare this with the oil example, you can see that to utilize breakout strategies quite well, you need to essentially focus on the bars that are above the breakout. If the bars above the breakout are many, then it could be an indication that you can actually see a buildup of an upside trade that you can actually, take advantage of. So that's a good example. Now, we are going to switch over and see trend following strategy. So for trend, we are going to use an example here. we need an example where actually price is moving in one direction, because usually with trend, we usually want to focus on where price is moving in one direction, because it's always better for us to have a good example for that. So now we are going to look at Euro USD here. So for Euro USD, we are seeing that actually there was a bit of a trend that was here. And if we look at it on the H1, we'll be able to see the trend better. So with trend, we're actually trading using price momentum to the downside, okay? So it can either be price momentum to the downside or price momentum to the upside. Now, usually how you trade a trend is you're looking to get in at the higher lows, okay? And in this case, we are trading it to the downside. So someone would have actually traded Euro USD with this trend, because you're only identifying well-defined points for you to actually get in and actually leverage or take advantage of trend with price moving downside. So how would you understand, how would you take advantage of a trend following strategy when you're using momentum? First thing is you need to collect your price, okay? Collect your price in a form like this. So collecting price is essentially just putting it in a section that you can actually do analysis on. The other thing also is, aside from collecting price, if you're actually looking for a trend, you also need to add what are called patterns. Patterns are very, very crucial, because patterns will actually indicate to you whether the trend is intact, okay? Sometimes you can actually have a trend, but then this trend is not aligning with price action. So the trend needs to align with price action, okay? So in this case now here, we're actually having quite a number of bearish flags on Euro USD. This is one of them. And if you bring your arrow and add, you can see that there's also another one right here, okay? And then when you continue down the line, you can see that there's even another symmetrical triangle here, which is an indication that we're having actually a bearish pattern, okay? So on this entire trend right here, especially after you've had quite a number of bearish flags, you can already tell that price is actually moving to the downside. Now, I'm going to talk about this breakout of the channel, which we have right here. This breakout of this channel right here was actually a fundamental event. If you recall very well, we had the ECB press conference happening, and the ECB press conference, when it happened, that's when we had this bearish flag, but then we had the breakout of the bearish flag to the upside. But you can see how price then continued to go down into this level here. And the reason why price did that is because there was already a bearish bias here, and price was already moving in that channel, indicating to us that it could move lower. So I think that's it for this particular one. We could also check on gold. I think I shared a bit about gold earlier today for those of you that were in a snapshot. And gold, of course, has also been in the same kind of trend. It's been in a downtrend. I don't know if I can pull up an example here from earlier. It could be a good example for us to actually look at. Let's see. Okay. Okay, so we have gold here. Okay. So for gold, as you can see here, we had quite a bit of analysis on gold earlier, but I want to talk about it in terms of trends. Okay, so this is the H1 time frame on gold, and as you can see here, we had a descending trend line here. Okay, and aside from this descending trend line, we still have rejections where you're seeing these different rectangles. Those are all rejections. We had one here, we had another one here, we had another one here. And then when you see this grab here, this liquidity grab, which you're seeing here, this liquidity grab is essentially just showing you, okay, that sellers were actually present. So even with trend following strategy, you can see based on how you have price evolving here, okay, you can see that price is actually moving to the downside based on what we are seeing here. Okay. And the other way also to tell whether you can utilize this as a trend following strategy is to actually use a line chart, because the line chart will always show you where price is moving to. Okay. The line chart will show you that actually we're having lower highs, as you can even see with gold. Still, we had lower highs, and we can see how price was evolving. Again, even then, with this really nice descending trend line, gold still failed to break it. And we had expected that if we break it, then we shall move higher, but we failed to break it and we moved lower. So this is really, really good. And there are so many ways in which you can actually utilize this to make money. So Kamuka Maino is saying, you're saying breakouts occur across all time frames, starting from 1 minute to the higher time frame, like weekly and monthly. Oh yes, oh yes. They occur on many time frames, and you can utilize them in many ways possible. Yeah. So again, Lioness, I don't know where you're getting that. I had said gold was expected to be bullish, because I've actually been maintaining a bearish stance on gold for quite some time. And based on what I shared earlier, you would have actually seen that with what we shared. Yeah. So I would request you to maybe go back and watch that snapshot again and just look through from what we shared. Yeah. So that's a bit about the different momentum price action tools. These are really diverse tools. So many ways you can utilize these to make money. But at the end of the day, you're essentially wanting to focus on momentum. And again, what I can also recommend to you all is you need to have an arrangement of your structure with how you trade. First thing should be trend. Second thing should be momentum. The other thing, of course, should be your other different analysis tools. So you need to ensure that you're actually following trend, because trends will allow you to be able to know what is the overall market direction. Okay, whether it is a top to bottom approach with what Innocent is sharing, or it's a bottom to top approach. Okay, starting from higher time frame lower and then lower time frame higher. The other thing that's also crucial is momentum can be utilized on all fronts. So you can use it with candlesticks, like we have gone through. You can use it with an indicator, but the indicator must be a breakout indicator. Okay. For instance, like the Kilt National that I'm utilizing is a breakout indicator. Breakout indicators don't only show you a buy or sell condition. It actually focuses more on a breakout. It actually focuses more on price action. So the other thing also is, especially this Keltner channel, we are utilizing it. We're utilizing it essentially to focus on breakouts, but also in addition to that, we're also using it with the exponential moving average. Okay, so the exponential moving average is really good, and it works really well with smoothing out price action. So it's actually something that you can look at with your trading as we go along. Lioness, you're asking, do you expect gold to go lower? Now, again, I'll say it again. Tomorrow we have the US CPI. So you need to wait for what the CPI comes out with. But of course, the sentiment is, if CPI comes in lower, then we could expect that we could have a reversal for gold to the upside. But if CPI comes in higher, and of course the consensus for the US banks, if you check online, you'll be able to see what the different consensus is for the banks. Most of them are actually having a mean average of about 3.1% for the CPI. So it's likely that CPI may surprise to the upside, which of course will provide downside pressure to gold. But of course, tomorrow we have a key event, so we can't tell as yet. We need to wait for what the event turns out as. So without wasting too much time, I hope you guys enjoyed today's session, and I hope you'll be able to utilize the different momentum price action tools for you to actually be profitable. With that, I wish you all an amazing evening, and I'll see you another time for a different session.